Hi, it's Joe Mazumdar of Exploration Insights at the Metals Investment Forum pre-PDAC edition in Toronto. And with me, I've got Jon Gilligan, COO of Liberty Gold. So Liberty Gold is a stock we've owned for a while. Your focus is on oxide heap leachable gold in the Great Basin of the Western US, but I guess your flagship asset is Black Pine.
Yep.
Black Pine, you just put out, I guess, the second mineral resource estimate, which was 50% higher than the last one. Now you're sitting on about 3 million ounces of mostly indicated and inferred. Right now you're drilling another 30,000 odd meters. And what's the goal of that drilling? Do you have another goal in mind with respect to resource where you want to get to?
Yeah, so we've got 2.6 million ounces of indicated and another 400 of inferred. We want to get that to above 3 million ounces in indicated, right, because we think that's the threshold to give us a resource base to do a PFS. Right. The drilling that's focused this year, the 32,000 meters, is focused on finding and refining some areas where we found near surface high grade. And that allows us to sort of stack the front end of the production schedule, which really improves the project economics.
So besides the drilling, what other studies have to go into this PFS, which is more of a 2024 product?
Yes, I think, one of the company's big focuses has been de-risking. So when you look at all the things you need for a PFS in terms of metallurgy, geotechnical work, water supply, land access, we've been working diligently on those over the last few years, sort of in lockstep with the drilling. And I think we will bring those key technical areas to a pre-feasibility level ahead of starting the pre-feasibility study. So that should be quite a short process when we do it.
And unusually, I guess, for a lot of these companies, like dealing with the drought conditions of the Western US, you've actually secured all your water rights. How were you able to do that?
So we had a strategy that we wanted to secure water rights in the basin immediately adjacent to the deposit. And so we engaged with local farmers, local landowners, and we were able to do option purchase agreements for water rights that are currently used for agriculture. Bit of an innovative deal, and so that water will be taken out of service for agriculture when it's needed for the mine, used in the mine, and then returned to agriculture at the end of the mine life. And so
it'll be treated.
So they'll be. So it's no new net drawdown in the basin for water, and additionally, we're able to purchase an existing old mining water right. So between the agricultural rights and the mining rights, we have sufficient water tied up for an operation that could be up to 100,000 tons a day heap leach feed, wow, which we think is significantly higher than our likely case, but it gives us a buffer capacity.
Well, in terms of where you're sitting right now, I mean, what other main risks? I mean, I guess metallurgy is huge for a heap leach. What kind of test work's being done on that side?
So we've been very proactive on metallurgy, and this is certainly, I've been with Liberty for 18 months, and I'm amazed at the level of metallurgical understanding in an exploration team. As of today, we've run 120 columns from 27 drill holes all over the property, looking at obviously a range of grades and a range of rock types. We've got 30 columns that are currently in the lab and about to finish. And all that information is distilled down into a series of predictive equations, grade recovery equations, of which we have 16. And those equations model recovery by grade, by rock type, and by deposit area. Right. So an extremely comprehensive.
Assuming the same size fraction.
So the second piece to the recovery equation is you do test work by different size fractions. And we found in this deposit that the recovery is very insensitive to crush size. So that gives us the confidence that we can go to a run-of-mine recovery technique and have a very good confident prediction of what that recovery would be at that grain size.
Okay. And so between the metallurgy and more drilling, and you've secured water, what are the other big de-risking studies that you have to do for an input into the PFS?
So power supply, we're in the process of finalizing a facility study, it's called, on the 25 kV line, the existing line that comes to the front gate. And I think we'll receive that in the next month or so. Feedback from the utility is that it'll do it. We can take 10 megawatts across that line, and we're in the process of starting contract negotiations to secure that power supply, because power in the US is tricky to get hold of these days. So that ticks off power. We are finishing off the geotechnical studies by building a structural model, and that will finalize our slope assessments, and they will happen mid-year. And then the last piece is a lands situation where we're in the process of purchasing private lands in and around the area that we will use for habitat offset or swap with the BLM to allow us to have private land ownership on areas that we would build mining infrastructure.
And here you're not dealing with the forestry, you're just dealing with the BLM?
So the deposit itself is on Forestry Service. The mine infrastructure or proposed mine infrastructure will be on the BLM. Forestry would be the lead agency, and they would coordinate with the BLM in the NEPA process.
Okay, so in terms of catalysts and what you're doing right now, how are you going with respect to like news flow? What news flow can a potential investor expect over the next 6 to 12 months? So
starting from the beginning of this year, obviously we came out with a new resource, which, as you rightly say, was, I think, that got us over the line in terms of this is now a material property, and it confirmed our thinking that this is one of the largest undeveloped oxide gold deposits not held by a major, so a significant deposit. We followed that up with a couple of press releases on some high-grade intercepts that we found, particularly in a zone we call the M zone, which would be right beside the heap leach. And that's, we drilled, in fact, the highest grade hole drilled on the property. We had a just under 50-gram intercept.
And this is after how many thousands of meters?
It's after 2,000 drill holes, so nearly 1,000 kilometers of drilling.
Wow.
So we think the system is still open. Going forward, we're going to have we're going to be reporting on metallurgical work in the next short period. And I think then that as we continue to drill in and around these high grade zones, we'll be reporting that. As we knock off some of these de-risking activities, we will bring those in. And then ultimately in the latter part of the year, we're going to redo the mineral resource at Black Pine.
Prior to the PFS.
Prior to the PFS. So that'll be in the latter part of the year, and that'll be the sort of the kickoff to go into a PFS.
So how do you find, like, in terms of the, I know the assay turnaround was a limiting factor in what got into the resource in the last resource update. How much more time have you given it for potentially like a 2 to 3 month assay turnaround?
Exactly that. I mean, at one point we got up to in excess of 12 weeks for assay turnaround. Coming into the start of the year, it's dropped now to about 8 weeks, so we can kind of live with that. So what we're going to do is we have a drill program in principle to the end of the year. We're going to bring that forward. We're going to bring in a few more drills, and we'll finish that program probably in Q3, and that'll give us time to get the assays back so we get all those drill holes included in the new model. And we're looking at something like 40 to 45,000 meters of drilling. So a material amount of drilling to go into that new resource.
So, I mean, as you're obviously a non-cash flowing junior explorer developer, how well are you funded to do this program?
So everything I've described, we're funded through to the end of the year. And into the early part of next year. At some point in that sort of latter part of this year, early part of next year, we will have to do something to raise capital.
Okay, but I guess the drop dead is the absolute is the PFS study that comes out in 2024.
Yeah, that's correct. Yep. I mean, the other thing, of course, is we do have our TV Tower deposit in Turkey, which is with that process is ongoing. Obviously, the tragedy in Turkey over the earthquake has sort of dampened enthusiasm. But we're still getting some positive interest in that deposit, and if we can end up monetizing that, I think that will really help us going into next year.
Yeah, I thought that was unusual, or not something special about Liberty, is that there was a lot of time between your last private placements because you've been divesting of other assets. And
we've been quite successful. I think we've divested seven properties in 6 years, and that's really managed to fund the treasury and avoid a dilution. So we're pretty pleased at that. I think that's a strategy that can work for us.
All right. Well, thank you very much.
Pleasure. Please. Thank you for your time, Joe.
Jon Gilligan, COO of Liberty Gold, oxide heap leach in the Great Basin of the Western U.S. It's Joe Mazumdar, Exploration Insights, speaking to you from the Metals Investment Forum pre-PDAC edition in Toronto. Thank you very much for listening.